Hi, buddy. Welcome back to Ox Talks. Thanks for watching the show today, and thanks for supporting the channel. I apologize. I'm still nursing a little bit of a cold here, tail end of it here, so I apologize for a little bit of congestion and my raspy, my raspy voice. But feeling good. Got back to the gym yesterday afternoon, and working through it. When you have a good overall health regime, exercise routine, healthy eating habits, things like that, when you get a cold or a flu or whatever it might be, your body is much more prepared to work through it quicker. Okay, you don't get as sick for as long. When inevitably something happens during change in season, temperature, a lot of family around, germs, things like that, we do get sick. But again, we talk about on this channel a lot about staying healthy and having a good routine. So vitamins, sleep, exercise, good eating habits, all those things are important. A lot of euphoria in the markets that I see. The stock market, as I'm recording this show today, is up across the board. I see that other asset classes, gold and silver, are up. I think Powell's making some remarks right now at some conference. I see the cryptocurrencies, Bitcoin's up. Ethereum is up pretty good today. XRP's had a bit of a pullback in the last few days after this massive run over the past couple of weeks. But look, across the board, you see euphoria. But the thumbnail for the video today, all is not well. When we dig a little bit deeper and look at some of the economic news that's being released, you have a lot of people struggling in this country. You have a lot of job loss. You have hiring slowing down. And you have the lower income folks really getting hit hard. So I want to share two stories with you today, both out of the Zero Hedge. One is the ADP employment numbers that came out today. And it says ADP employment disappoints. U.S. manufacturing sees its biggest job losses since 2023. After surging 233,000 higher in October, the biggest jump since July of 2023, expectations were for a slowdown in job additions in November to 150,000. So they were expecting 150,000 additions. And it says the reality was a double whammy of pain, with October's surge revised down to just 184,000 and November's print missing expectations at 146,000. So again, we talk about this often where you'll get this surprise shock number to the upside, and then the 30 days later, it is revised down substantially. So October's great number of 233,000 was pulled back to 184, and the expectations for 150 this month actually came in at 146. Manufacturing lost 26,000 jobs. Guys, comment below. Why are we losing manufacturing jobs in this country? What is going to be done to bring manufacturing jobs back? We're going to have to see with Trump administration coming in here in a few weeks if that is going to be, if that's going to change. This is very interesting, the breakdown of change in jobs per the size of establishment. Small establishment, meaning 1 to 19 employees, or 20 to 49 employees. The medium establishment is 50 to 500 employees, and large establishments, 500 plus employees. Saw a 29,000 reduction in payrolls in the 20 to 49 employee category. So small businesses are right now, apparently according to this data, is taking the brunt of the losses. October's revision, it says, was the largest to the downside since May of 2023, and it was the biggest manufacturing job loss since June of 2023. A theme we always discuss on this channel as well is insulating yourself from a unexpected loss of a job, either to you or to your spouse or someone who is the breadwinner in your family. And how do you do that? Well, nothing is 100%, but we discuss oftentimes if you insulate yourself somehow with an alternative source of income, meaning if you are an employee, if you're not an employer, if you're not self-employed, or if you don't own and operate your own business, you are at the whim of somebody deciding that your position is dispensable, okay, and that they no longer need your position. I saw something yesterday, middle management positions are getting hit. So where are you at in the food chain in your business? All right, and please be very, very careful. I wouldn't be surprised to see an acceleration in job cuts in 2025. Will there be some good things happening? Yes, but we know that there's also going to be some major cuts, proposed cuts to the government job sector. Especially if you're in a government job, please consider thinking outside the box now and starting some kind of a side gig, side hustle, small business of your own, whatever it might be, so that you don't find yourself, let's say, exposed, all right, and vulnerable. And please, we discussed this also, paying down and reducing debt. Not only paying down existing debt, but quit getting into unnecessary debt obligations. Quit spending money on credit cards and taking out loans, whether that's credit card loans or home equity lines of credit, whatever it is, for things that you really don't need. Okay, again, I know it sounds like I'm preaching, but I've learned this lesson. Look at over the years. The hard way as well, okay? And I've shared some stories in the past. It's easy to get in over your head. It's easy to start spending more than you're taking in. And I know a lot of people watch this show and comment are very, very good and have been very wise with their spending. Some are struggling, and it's day to day. And the next story I'm going to share with you, it shows exactly how the lower income folks in this country just cannot right now keep up. Foot Locker plunges on softened sneaker demand. It says low to mid income consumers is out of Zero Hedge also today. Low to mid income consumers feeling the brunt of sticky inflation, elevated prices, and high interest rates have dialed back their demand for fancy sneakers. As a result, shoe retailer chain Foot Locker slashed its full year guidance after reporting dismal third quarter earnings, right? So no matter what you see, the malls are busy. You have Foot Locker, a major staple in a lot of malls and shopping areas across the country. Thousands of locations are simply they're not making it. They're not generating the revenues that they once did. It says Foot Locker's customer base primarily consists of low-income consumers offering a glimpse into discretionary spending trends. The dismal earnings and downshift in full-year outlook reveals that the bottom tier of consumers remains under significant financial strain due to elevated inflation, high interest rates, mounting credit card debt, and depleted personal savings, right? The free money, the PPP stuff is out. The money's gone. They're racking up credit cards at all-time rates, at all-time highs, and with interest rates, some of these cards is 25, 30%. And some of these cards are also front-running what they perceive to be some additional regulations coming their way, and they're even increasing the rates on these cards more. Comment below, but I read something a couple days ago that some of the main shopping stores, Macy's and things, actually have recently increased the interest rate they're charging on the credit cards, and they're also increasing the penalties that you get if you're late. So let's talk about total location count for Foot Locker. They have 2,450 stores. That's down 6%. Foot Locker U.S. stores, 691. That's down 6.6%. Kids Foot Locker stores, 376 of those stores, down 4.1%. Champs Sporting Goods stores, 390 locations, down 18%. And the CEO says, despite strong performance, we're taking a more cautious view and are lowering our full year sales and earnings outlook due to a more promotional environment, and softer consumer demand outside of key selling periods. I mean, if they're not ramping up for a holiday or something that they can push out with sales and specials, they're simply not making sales. For the full year, Foot Locker now forecasts sales to dip between 1 and 1.5%, compared to previous guidance of between 1% dip to a 1% gain. Foot Locker shares plunged 14% in pre-market trading as of Tuesday's close. They were down 22% on the year. So again, consumer items remain under major pressure. All right, so if you just look at CNBC today, stock market's up. The top percentage of the society appears to be living large right now, spending money. A lot are trying to keep up with the Joneses, and they're spending money they don't have to spend. So I hope the content was useful for you today. And please, everyone, just watch, have a plan going into 2025. Don't wait and don't be reactionary, okay? Take some advanced steps to think through a backup plan if things should get really bad in 2025, let's say in your area of employment, whatever it might be. All right, thanks for watching. Talk to you all soon. Bye.